Hi everyone, this is Ashish with Investor Friendly CPA, and today we are covering the taxations of various kind of entities. This topic can be very complicated and lengthy, and I'm trying to just cover very high level general overview, and I'm covering a tax overview, not legal overview. These entities have serious legal implications, so don't rely on this video for legal advice, and don't even rely on this video for tax advice, because this is just supposed to be a high level overview to tell you how these entities are taxed, and it might be better for you if you choose one over the other, but a lot more planning goes into choosing a correct entity for your business. And I wanted to put this together because people get confused. Even the professionals get confused. If you're working as a CPA for 2-3 years, it still gets confusing for a new staff to understand all these entities and how they're taxed, and what are the implications if you have single member LLCs and multi-member LLCs. It gets confusing, and the saddest part is the business owners and investors who are starting out and who do not want to work with the CPA because it's cost prohibitive for them will choose the wrong kind of entities, and that mistakes those mistakes at the every year is going to cost you more and more as you move forward. Happens all the time. So hopefully this video will help you guys at least get started with a good first step towards choosing the right entity, and then you can talk to your own advisors regarding which one might be the best choice for you. And so we have already talked about why one of the entity we are going to discuss today, which is S Corporation, is bad for your rental real estate for various reasons, right? But in this video I'm not going to go into details like that. Rather, I just want to cover how each of these entities are taxed, and maybe are you going to save money if you choose one entity over the other. I am not going to talk about various tax saving strategies that are available for each of these entities, because each entity might have its own benefit for you. I'm not going to go into all those detail and tax saving strategies. Rather, I'm just going to look at these entities, just give you a high overview of what they are and how do you form them during your business cycle, and how are they reported in your taxes, so you can make informed or maybe ask an informed question to your own tax advisor. I will be sharing my screen on this video because I just don't want to ramble for the next 10 minutes and lose you guys. So maybe some graphics will help you, and this is going to be a longer video, so just pause it if you need to and come back. So let's see. So this is a small or very quick chart I put together. You're going to find more comprehensive charts even online, but they have too much information, and it just gets so confusing for the individuals who are not even a tax professional. So I just summarize this, which some information that might be most relevant for the beginning level of investors or business owner. If you want this chart, just leave us a comment below, or reach out to us through all the media we have listed down, and we will give you this chart, or we might give you even the other detailed chart you need if you want one. But I'm more than happy to share this. So in this chart you can see we have I have divided them into 4 buckets. We're not going to talk about trust here. Trusts are its own world, and it gets complicated. I'm just talking about some kind of common entities that business owner need or will get when they run their business. So before even I get into these entities, let's talk about okay, this is what I'm saying. Let's talk about what are out there, right? We have LLCs, we have no, so you can do this. You can either have no entities when you run a business, or you can have an LLC. And LLC, you can have two entities. You can have multi-member LLC, you can have single-member LLC, as you can see up here. And if you don't want LLCs, you can also have a partnership. You can also have an S corporation, and you can have C corporation. So too many entities, and I know it gets confusing. So I will try to break this down and how it works from taxation perspective. Okay, the first bucket you see is single member LLCs or no entity. They are in the same bucket because they are taxed exactly the same. If you go open up a business, if you buy a rental, if you go open up your landscaping company, a restaurant, if you have no entity, legal entity, you're just going to report all the income on your personal return, okay, under Schedule E or Schedule C, depending on what you're doing. But if you go and get an LLC, which is single member LLC, meaning only one person owns the LLC, then it's the same as having no entity from tax perspective. From legal perspective, it gives you all the liability protection that you're looking for if it's run correctly. But from tax perspective, it's the same as having no entity. So that's why it's in the same bucket. And you can see, and then down below here, when I've written down, this is same as a sole proprietor, meaning there is no entity. You just run your business as a sole proprietor. The taxation is directly reported in your personal tax return under Schedule C or E. There's no different tax filing requirement. I think there's a typo there. There's no different tax filing requirement, and there's typically no tax savings for single member LLC. When I say this, you don't get tax saving just because you have an LLC. You don't get extra deductions just because you have an LLC. I get this question a lot from my client. Do I need to get an LLC so I can deduct all these expenses? It does not matter. You get to deduct same expenses even without LLCs. So, it does not provide you any tax savings. There are rare instances where even a single member LLC can sometimes help you, but it's very rare and might not even apply for all the businesses. The second one is multi-member LLC or partnership, and they're in the same bucket because they are taxed exactly the same. So what is multi-member LLC? If let's say you and your partner opens up an LLC and you own 50-50, that's a multi-member compared to one person single member that we discussed earlier. And multi-member, you can have 100 partners, 200 partners, 40 partners, doesn't matter, multi-member LLC. And multi-member LLC is taxed just as a partnership. Just like a single member LLC you saw up here, when I said if you have a single member, it's just taxed as no entity. If you have a multi-member LLC, it's taxed just like a partnership. So what is partnership? Partnership is basically you and your partner come together to establish a business or run a business. You can have a general partnership, which is GP, as you see here. You can have limited liability partnership, just as a limited liability company. It's a partnership between two individuals or two or more individuals. But if you get an LLC that's owned by more than two partners, right? Then it's also taxed as a partnership. So that's why in the same bucket. So how it is taxed? I just talked about it's taxed as a partnership. You need to file an extra form called 1065. Multi-member LLCs are considered a pass-through entity, meaning the entity itself does not pay taxes. It will file a report, the tax form, which is 1065, right, as mentioned up here, and then you will pick up the income at the personal level. So you still pick up the income at the personal level just as a single member LLC gets reported in a personal return. You also pick up the income at the personal level, and that's why it's called pass-through entity. And if it's done correctly, you could save some taxes if you have a spousal partnership, husband and wife partnership, through some special allocations. And we can talk about that in detail in other videos. But typically there is no tax savings just because you have an LLC or multi-member LLC. But multi-member LLC, you can have some savings if it's done correctly. So next one is S corporation. So what is S corporation? you cannot go and create, go to the state website and create S corporation. It's a tax election. Okay, you have to elect to be taxed as S corporation. And good thing about this is both this first bucket and the second bucket can elect to be taxed as an S corporation. For example, let's say you open up a business as a single member LLC and you open a business as a multi-member LLC, and you determine after 2 years you would benefit from S corporation. You can always elect to be taxed as S corporation. And why would you get taxed as S corporation? Because there is a possibility of saving some self-employment taxes. So let me go through this what I have written down here. This is taxed as an S corporation. You do need to file an extra form called 1120S. This is also a pass-through entity, just like a multi-member LLC or partnership. Works exact same way. And if it's done correctly, like I said before, you can save some self-employment taxes. Okay, so S corporation is really not very different than a partnership. Logically, partnerships are very complicated compared to S corporation on various aspects, but if you think about how it's reported, it's the same as a partnership. You have owners, you're gonna report the income in your extra form, you're gonna pick up the income in your personal return, and that's how, and it's still a pass-through entity. If you look at these two buckets, that's why I have, down here you see those two are under pass-through entity and income is picked up at individual level. So that's an S corporation. Now last one is C corporation. I just want to say this, that most of the business probably don't want to be a C corporation for various reasons. You're going to see CPAs arguing about, okay, this is good for you, this is bad for you. My view is it's most of the time it's not, just because it has a double taxation. Yeah, you can do some strategies to reduce that, but for someone who is just starting out and who who don't even know what LLCs and single member LLCs mean, just jumping into C corporation is not good for you. I mean, it might be good for you, but you need to talk to your advisor. So how does C corporation work? Taxed as a C corporation, you need to file an extra tax form called 1120. One big difference compared to other entities are this is not a pass-through entity, meaning C corporation pays its own tax. Partnership, S corporation, give you the income and you pick up that individual level and pay at your individual tax rate, right? C corporation can't do that. It has to pay its own taxes. And with that comes something called double taxation. So corporation pays tax, and let's say you have $100,000 remaining in your business after corporation pays tax in $100,000 already. If you take that money out of your corporation, then you will pay taxes too. So it's a double taxation. Think about let's say you have a stock in Delta or Coke or Apple. You get dividends, right? That dividend you pick up in your personal tax return and pay taxes. That's exactly what it is. The corporation, Apple, already pays taxes in its earning net income, and when it sends out dividends to owner, which you are the owner of the corporation, you again pay taxes on the dividend. So it's double taxation. It's very hurtful for small businesses if you do not plan your corporation correctly. But it can be actually good for you if you are eventually going to sell your business. That's, I want to put a disclaimer out there. Not everyone is going to qualify for the avoidance of the tax. So you need to talk to your advisor and tell them, hey, I am planning to sell this business eventually. Is C corporation good for me? And talk to them, and they probably will help you when you communicate those things to them. So that's the overview of all the entities, very high level overview, right? One piece of advice that I want you guys to take away from this video is, if you are not sure which entity to get, always get single member LLC when you are starting your journey. because single member LLC can be converted to any other entities. You can, you can always add another partner. You can to be a partnership or multi-member LLC. You can always convert that to S corporation or a C corporation. So don't just go and get C corporation. Get a single member LLC. So I'm so sorry this video is way long than anyone wants to watch. But if you're in the pain and if you want to know this information, hopefully this is helpful. And if you found this video helpful or have any question, just leave us a comment down below and we'll get back to you. Connect to us through all the social media down below in the description. And I will see you in the next video. Thank you for watching.